Hi, everyone. Happy New Year. This is Pat Click from the BSBA, Black Small Business Association of California, and I'm happy to be here today. This evening, we're going to talk about financial management. But let me read something to you first. Sound financial management is one of the best ways for your business to remain profitable and become profitable and solvent. How well you manage the finances of your business is the cornerstone of every successful business venture. Each year, thousands of potentially successful businesses fail because of poor financial management. As a business owner, you'll need to identify and implement policies that will lead to and ensure that you will meet your financial obligations. To effectively manage your finances, plan a sound, realistic budget by determining the amount of money needed to open your business, your startup costs, and to maintain your business, your operating costs. The first step to building a sound financial plan is to devise a startup budget. So, we're going to talk a little bit about now. Am I a financial guru? No, I am not. But do I understand basic finances? Yes, I do. So, we're going to talk about some of the financials. Access and manage capital to scale your business. My name is Patricia Ventures Click. At the completion of this course, participants will understand the value of protecting your credit for future borrowing needs, be prepared to apply for business loans, understand the key components of financial statements and why they matter, understand the value of an executive summary and a business plan, and prepare to ask yourself the critical questions for your success. Again, expected outcomes, to understand why knowing your numbers matter. If you don't know your numbers, you really don't really know your business. To learn the importance of not saying, how much can I get? A lot of times people go apply for loans and, well, how much money can I get? Well, that tells the lender immediately that you don't know your numbers. Because if you knew your numbers, you would know how much money you need. Be able to relate with the bankers and not be afraid of them. And you will learn how to put a proper loan package together and present it. So, the audience is small businesses interested in business loans, grants, or investors. Sometimes, even with grants, you have to be able to demonstrate your financials. Businesses that want to learn about business credit. So, let's get started. What does a small business owner need to do to get a bank and other lenders to say yes to that loan request? So let's look at this here. You need to really take control of your credit profile. A credit profile is everything a lender sees about you and your business. Even your personal life, your own personal profile is everything that a creditor needs to know about you. It helps create a sound financial footing, establish business checking and savings account. Everyone needs a business and checking and savings account if, in fact, you have a legitimate business. A strong payment history may strengthen your credit profile. It's very important that you pay all your bills on time. Review your personal credit yearly and clean up any issues because sometimes things get on your credit that really don't belong there. So you need to make sure that you clean it up and you pay attention to it. You want to bank strategically. You want to consolidate your banking relationships. You don't want to have accounts all over the place. You want to consolidate that. A strong banking history may support your credit worthiness. You want to demonstrate a consistent flow of funds. Cultivate your relationships with the bank. You should know your banker. Wherever you bank with for your business account, you should be in that bank, introducing yourself, building a relationship with that manager, and you want to visit your bank regularly. Be clear about your situation and your goals because sometimes they can help you. So let's talk about the 5 C's of credit: credit history, collateral, capital, conditions, and capacity. Credit history is how you handled your past credit obligations. Did you pay your bills on time? Your collateral, what are you bringing to the table? Your personal and business assets they may offer to back up for a loan, just in case you have you know problems in repaying it. They know they have some type of collateral. Capital, what's your personal investment in this? Conditions, Everything that affects your ability to repay the loan, including internal and external factors and capacity, how your business will generate enough cash to repay the loan and other commitments. So let's look and see what makes up your credit score. So we talked about those 5 steps. So capacities, 30% of your credit score. Your debt is about 10%. Your credit, 10%. Your length of time that you had credit is about 15%. And your payment history is 35%. All of these factors make up your credit score. So, what matters most to lenders? No matter who you ask to lend you money, the lender is going to be looking for a business owner who knows their business, has the ability to run it well, and willing to work hard to make it succeed. A business that is financially sound, or if it's brand new, appears to have the ability to make enough to pay its bills, give its owner an income, and pay back the loan. Collateral to cover at least part of their lending risk. An investment from the business owner. Usually, the business owner owes money and they want to see how much money they owe and how much money they're willing to invest in the business. I have a list of financial institutions. Some are considered fintechs, which really solely operates with technology, CDFIs, development financial institutions, community banks. Then you have non-bank lenders, and then you have major banks. So when we give you the presentation later, you'll see the list of the banks, the fintechs, the CDFIs, the non-bank lenders, and the major banks. Lending programs. A lot of the banks have lending programs. Bank of California, Bank of America, California, International, Endeavor Bank, SunWest Bank, Wells Fargo Bank, Zions Bank Corporation, and California Bank and Trust. So here's the document checklist, small business loan. So if in fact you're applying for a small business loan, these are some of the documents that you're going to need. A written explanation of the loan request, the amount and the purpose. And this is when you need to know the amount, but all the other paperwork is going to support why you need that amount. You need to complete and sign the small business loan package application. Complete and sign any other applications, depending on what county you're in. LA County has, and I happen to be in LA County right now, there's a different type of application. They might have a different application up in Sacramento. Forms, letters to be completed by all applicants and guarantors. Your business tax returns for the last 3 years, and an interim financial, including the aging reports, your accounts receivable and your accounts payable. You also need to make sure you schedule your outstanding debt, projected monthly profit and loss statements, a business plan, and executive summary. So, a business plan tells the lender exactly what type of business you're in. The executive summary is really a summary of the full business plan. It's going to talk about your business model, it's going to talk about your competition and how you're operating, who's running and driving the business. They need to know that. A lender wants to know how you operate, who's managing the business, who's in there the day-to-day, running the day-to-day operation. You need to provide ID, California driver's license, or passport. You have to sign a 456T. And then you have to provide financial statements, certification of your financial statements, and your tax returns, as I said earlier, for the last 3 years. Needed documents. Know your credit scores, your business plan, executive plan for existing business, your projections, and your collaterals are very, very important. So non-traditional lenders, we have non-traditional lenders, credit unions, micro lenders, community-based lending programs, community advantage lenders that make loans to special SBA loan programs, and then also online lending platforms. Here we have a glossary. We're going to give you a glossary of terms in the financial arena. What is accounts payable? What is receivable? What is accrual basis of accounting? When you talk about fixed assets, what are your fixed assets? Your balance sheet, your burn rate, your capital, your cash conversion cycles. When it says cash on hand, what does that mean? Current assets, current liabilities, debt principal, depreciation, equity, fixed costs, gross profit, and income statements. Also, too, when you're talking about an invoice, what terms do you have on paying your invoices and receiving payment for your invoices? Liquidity, net profit, variable cost. Cash flow is the process of tracking how much money is coming in and out of your business. This is one I extracted from that list because I can't talk about all of them. But cash flow, how's your money flowing through your business? Cash flow is the term used to describe changes in how much money your business has from one point to another. Cash flow management is keeping track of this flow and analyzing the changes. Manage your cash flow. Stay on top of your bookkeeping. Generate your statement. Analyze your cash flow. Figure out whether you need to increase your cash flow. Cut your spending where you need to. Spend, speed up your accounts receivable when you can. And then repeat everything. Some best practices that I encourage all small business owners to have is record your cash receipts when received. Keep all your funds secure. Document any transfers. Give a receipt to each customer. Sometimes it's gets frustrating or you get busy and well, I'll get your receipt later. No, no, no. Get that receipt to them as soon as possible. Never share your passwords. Give each cashier a separate cash drawer. Fortunate but unfortunate. I used to work as a teller, and someone the person that worked with me was three of us in this particular job. And this one person was really trusting of this other employee and didn't lock her cash drawer, left it open at all times. And what was happening, he was stealing money from her cash drawer. And then when they finally figured it out, money was missing, all the fingers pointed to her. Secure your money. Make sure you're the ones that's responsible for it and be accountable for it. Make sure you supervise every cash deposit and supervisors approve all voided refund transactions. You want to make sure you track everything. Now, there's a lot of agencies and resources out here to help you. You have the Fair Debt Collection Practices, Credit Card Accountability, Fair and Accurate Credit Transactions, and the Truth in Lending Act. Managing your money is very, very important. We have people on our team here that can help you, break down your finances. What are your startup costs? What are your ongoing costs? Be able to kind of lead you in the right direction of managing your cash. It's very important because your business is not going to work unless you're managing your cash. Your business, your cash is really a reflection of your business. So make sure you make that a critical point and make sure that you keep eye on your money. I want to talk to you a little bit more about that business plan. When you go to a lender or an investor and you say, I want to get a loan. First thing they says, where's your business plan? You're going to give them your business plan. And they're going to look in that business plan and determine how much do you really know about your business? How do you know how do you know how it operates? How do you know again about your competition? What is your marketing strategy? Who's running the business? They want to make sure that you are truly, truly invested in your business and make sure that you're keeping your eyes on all transactions of that business. They don't want to lend money to a company that 50% of the time is spent over here and the other 50% of the time is spent over there. No, they want someone that's truly invested 100% in that business. So pay attention to your finances. So again, as I stated earlier, I'm not an expert in finance. I run a business. I manage my business. I happen to have QuickBooks, and I happen to have an accounting because I know where I'm weak and where I'm strong in. And finances is not my strong point. So I hire someone to help me, but we work together. I don't just give her my books and let her go ahead and do whatever she needs to do. We sit down together and we go over my finances because my finances also is an indicator where I need to improve within my business based upon my goals. So I just want to put a disclaimer here. These training materials are not intended for as a general. I'm sorry. These training materials are intended as a general guidance, and only and may or may not apply to a particular situation based on the circumstances. The materials do not create any legal rights or impose any legal binding requirements or obligations on Ventures Click Ventures LLC or the organization here I'm representing, the BSBA. I want to thank you for coming out and just getting this brief overview of financial management. I read your definition of financial management when we started. I encourage you to look at your numbers, know your numbers, and do the best with your finances. I promise you, when you get control over your finances, you'll have much more success with your business. Thank you very much for coming out this evening and have a wonderful evening. And again, Happy New Year.